Hey guys, hope you guys are having a profiting day nowadays. So I thought I'll come up with the new concept that's on trading with the trend and the pullback using RSI. It is becoming very difficult nowadays when you see Nifty from in and around 15, yeah, I think from 15,800 till 17,000. There is no proper pullbacks. If you are a pullback trader or you're trading with the trend, you basically expect some Fibonacci or some trend lines to break, or you expect this support or resistance to have a great pullback and then get into the trade. But since Nifty is going all-time high nowadays, and people are facing a lot of problems nowadays. So how do you deal with this? That is what I wanted to teach on how to trade on trend. So yeah, so you have so let us take with 15 minutes for now, and then let me first teach you how this range market works, and then you can easily spot this on the trendy market like this. I think this would be very easy than this fluctuating market. So everyone would want to know, how do I trade in this kind of market? So let me stay on 15 minutes. No, let me go on 5 minutes candle for an intraday where you can have a proper look here. So let me consider this as my ranging market. Okay. So let me start my journey from this. I see that there is a downtrend seen here, but basically what I see on a lower time frame is here the market was fluctuating like this. Okay, so in this kind of market you should know that the momentum, if the momentum is strong or if the volume is strong, and if you should know that if people are into the trade. See, when you see these kind of market structure, when there's a lot of volatility and people don't know where the market is up to, or when there's low volume and when people are not trading, this is when you see this kind of market. So that is when you have to see your RSI. What does your RSI say? RSI, basically you can find divergence, right? If you guys want to know about divergence and RSI, I've made a video on it. So basically the market says it's in a fluctuating and a range market, but my RSI says no, the market the volume, people are trying to short here. That is what the RSI says, relative strength index. That is what it means. So once the market has broken the structure like this, wait for your pullback. Okay, let it break, and then see what is our RSI doing. See, here it has broken our structure and then gone a little bit down, and then it has come back. This is where you get your discounted price. So basically people wouldn't want to buy or sell at lowest price or highest price, right? They want some discounted price. This is what it is. So once you take here that, okay, fine, our Fibonacci 61 says this is the right time to sell. I mean, I want to go short from here. So you basically put your stop loss above this and get into the trade. Okay, fine, you're into it. Then you let the market flow on your side itself. Then you start seeing some consolidation, where this is where you have to see your RSI. What is it actually doing? The market is on the downtrend, but the market here, it is holding at this point. At this point, the market is holding here, and there is a reversal here. That is what our divergence says. So you can blindly take a buy here, but we are not looking for RSI right now. We are looking for trading with the trend and the pullbacks. So once you see that there's a flow in the market on the downside, and then you see an upside, okay, let it go till wherever it has to reach. It will have its own destination, or it will have its own resistance like this. So let it reach. Once it reaches, okay, you see that there is a break of structure again. Here you see high, it's breaking. Then you see that the low is broken right here. Okay, so this is where you have to take your trade. Okay, basically our intention is in the downside itself, but there is a small correction on this way, where in the correction also you will find there will be higher high and higher low concept. Just pay attention here that the market has crossed this, and it is crossing the high like this. Once it crosses, there's a higher high formed, and then the higher low is formed, and it is respecting this level right here. Then again it crosses. So basically there's a break of structure here again, but our basic intention or basic view is downside. We are waiting for pullback right now. So once you see that there is a break of structure here, once you see there's a break of structure like this, you can see RSI. Okay, RSI is also satisfying our need. This is where you got to take your trade by going short from here with stop loss just above your pullback. So if you want to have sense here, basically if you feel if the market goes above this line, you know that it makes no sense for me to stay in the trade. Always trading pullbacks is always good with the recent highs or recent lows, and dealing with the stop loss. So this will be my stop loss, and whenever if you feel that the market is going above this, so obviously it makes no sense for me to trade. So my stop loss will be above this, and the target is on you. People follow a lot of methods. If this is A, B, and C, D pattern, or they follow Fibonacci 61 to 161, or they have their own concept of having this as my support zone like this, and so that they can trade it till here, where my target would be this long. Okay, that's how it is going to go. So after these, so let me clear this. Okay, once you find a support, so again my basic intention is still on the lower side. I mean, I want a short, so again I'll wait for pullback. Okay, meanwhile when you see this kind of large move, usually it's below 30 or 40 RSI. That is where you feel that there are a lot many traders who have shorted and booked their profit. When do you see the market coming back? You see the market coming back when people have profited the short trade, and then they have started to buying again, because they feel that it is no longer going to go below. Once you see that this is a good short, okay, and you see that this is also a good shot where there are lot many candles on the seller side or the side you are trading, and there is very less candle where you do not want to trade. So basically, if you are on a downtrend, the more number of candles will appear on your side, or a downtrend. If it is an uptrend, you will see lot many candles on an uptrend, not on the downtrend. So that is what is happening. See, let me have it with the info where from here till here there is 14 bars, and just to cover this half of this length it is taking 15 bars. So basically it is the main motive is people are on the seller side, not on the buyer side. So once you see that there is a good candle like this, where a doji candle, or my RSI says it is going below this recent high. Here also you can have this higher high and higher low concept, where it has this was a particular high, then once you mark this high, then again it has crossed. Then if this is my particular high, it has crossed again. If this is my particular high, it has crossed. Once you see that it is maintaining this level, once and twice it is maintaining this level, and then you see that there is a downtrend, I mean the break of structure of the recent candle, what you can do is the same thing, where you can short below this to however you want to have your target. Okay, then till where do you want to stop doing this? Okay, the same higher high and higher low concept. So basically if you go on a higher time frame, this is my lower high, lower low, lower high, till here lower low, right? That is what is forming here. Then once you see, you can keep shorting till it crosses one of the lower highs. So basically you can short it till here, where you can take a chance here too, but with the stop loss just above this. Meanwhile, you have to check on your RSI. What does my RSI say? It is continuously breaking. If this is my recent high, it has broken my high on RSI also. So this is where you can take small stop loss, or you do not have to trade in this position, in this particular position, as the volume has changed and it is maintaining lower low. It is finding difficult to cross this particular lower low. So there's a change of structure. When you see there is a change of structure like this, okay, then you go on the same concept where you follow from this position, where you could see higher high, and then once you saw that it's a higher high, you again think for a discounted price, you want a pullback just to buy, right? So how do you find that? Now your trading structure is changed, you are on a bullish way. So what happens is, if this is my low, it is crossed again, it is crossed again, it is crossed again, it is maintaining but yet crossed again it is here it is maintaining the level. And if this was my particular high, okay, this was my particular high, once you see this kind of break of structure, I think, okay, this was my recent high. If this is my recent high, there's a break of structure here, and then it is finding difficult to go below this. So this is where you can take a risk to go long till where it is your wish. You can trade it till here or even more. That is on your risk factor. But trading pullback is always dealing with stop loss, where the stop loss is just below your recent low. Okay, here you want to see the change of structure in this too. The market is here, the market is trying to, if you feel the market is going below, but the market is trying to maintain this level. So please learn what is divergence in RSI. RSI is the only indicator shows you the strength of the index. Okay, and trend you have to deal with. So dealing with trend and stop loss, you have to know higher high and higher low concept, RSI, and Fibonacci would also be recommended. So try on these things so that you will know what is the market doing, and you can know the sentiment of the buyers and sellers. Do follow my channel for more contents. So thank you. Please keep following.